So, if you thought yesterday was going to be quiet, well, think again, because markets had a lot to digest. Hey everyone, it's Thursday morning, April 30th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. Alright, let's get started. Let's break down what happened yesterday. Now, starting with the broader picture, European markets closed lower across the board, while in the US, things were a bit mixed. Tech held up relatively well, but both the Standard & Poor's 500 and the Dow Jones finished slightly in the red. Nothing dramatic, but definitely a cautious tone. A big focus yesterday was on the Federal Reserve and Jerome Powell. The Fed kept rates unchanged, but the messaging shifted slightly. Powell made it clear that inflation is still a concern and, importantly, nothing is off the table. The central bank remains fully data-dependent, so no strong forward guidance, just flexibility. But honestly, the real action came after the closing bell. We got a wave of major earnings from Amazon, Meta, Alphabet, and Microsoft, and initial reactions were, well, all over the place. One thing that really stood out, Meta is ramping up capital spending, while Microsoft is actually dialing it back. That divergence is interesting and could tell us a lot about how these companies see the AI race evolving. Alright, let's get into the numbers. Meta delivered a very strong quarter. Revenue jumped 33% year over year to $56.3 billion. Net income surged 61%, and earnings per share rose to $10.44. So, fundamentally, a very strong report. But, and this is key, the stock actually dropped more than 6% after hours. Why? Because Meta raised its capital expenditure outlook significantly. Investors clearly didn't love that. Amazon also came in strong. Revenue increased 17% to $181.5 billion, and earnings per share jumped 75%. Operating income rose sharply as well, and guidance for the next quarter was solid. Overall, a very clean set of numbers. Alphabet was another standout. Revenue grew 22% to $109.9 billion, while net income surged 81%. Cloud revenue in particular was impressive, up 63% year over year. The stock reacted positively in after-hours trading, gaining around 3.5%. And then Microsoft, another strong quarter. Revenue rose 18% to a record $82.9 billion. Cloud continues to be the key driver, with Azure growth around 40%. And interestingly, their AI business is now running at an annual pace of $37 billion, up more than 120% year over year. So overall, the takeaway? Fundamentals in big tech remain very strong. But markets are starting to look beyond just growth and are focusing more on spending, especially when it comes to AI. And that's where things get interesting. Alright, that's it for today's Capital Markets Quickie. If you found this helpful, hit subscribe and stay in the loop. And if you want more insights, just add me on LinkedIn. Always happy to connect. See you tomorrow morning.